Good evening. It's time for business. Let's get down to just that. The Council of Governors remains tight-lipped on its position regarding the proposed allocation to counties for the financial year between July 2021 and June 2022, even as it indicates that it has arrived at consensus with the National Treasury. On January 20th, the Commission on Revenue Allocation proposed an allocation of 316.5 billion shillings in equitable share to the devolved units for the next financial year, a position that would mean no increase for the second consecutive financial year. The Council and the National Treasury are expected to present their views before the Intergovernmental Budget and Economic Council on Wednesday.
We've also engaged on the Division of Revenue bill, which we had the honor to present to a subcommittee of Cabinet this morning. Later on, we also had engagement with the Council of Governors through the chair. We've narrowed all the differences. We have now agreed on a position. CRA was also involved.
For the first time in quite a number of years, we are going to IBEC with one view. I think what that means is that we should expect the Division of Revenue to be concluded in a very timely fashion.
The government has returned to the domestic market looking to raise an additional 18 billion shillings through reopening two bonds, one issued in 2015 and another in 2020. Investors now have the next 8 days to take up the latest debt issuance by the government, whose period for sale closes on February 17th, that is this year, 2021. The government is offering investors 11.8% return for the 2015 paper, while the 2020 paper is offering 12.6% return per annum. This comes even as the Institute of Economic Affairs warns that the state is not doing enough to tap into long-term debt, exposing the country to debt refinancing risk.
Strategy is this, that the government of Kenya will move debt from shorter-term to longer-term debt. It's not moving that way fast enough. So what that means is that we are not solving the debt distress problem where you have to, use bonds. I mean, rather use bills, treasury bills, to pay other treasury bills. Yeah. So basically, you're swapping one kind of paper for the other.
Savings and credit cooperatives, or SACCOs, have been put on notice over what the government terms as poor credit risk profiling, which leaves the industry vulnerable to high levels of bad debt. Speaking while placing the spotlight on the 26 billion shillings pile of bad debt in the deposit-taking SACCO movement, Cooperative CS Peter Munya says that part of the reforms being pursued seek to protect borrowers' assets from seizure by lenders who failed to adequately price risk.
The cooperative movement has so far weathered the storm of the COVID-19 pandemic, with key parameters still pointing north at the end of the recently concluded year. Total assets in the industry grew by 12% to 622 billion shillings in 2020 from 556 billion shillings the previous year. Gross loans to members improved by 11.5% during the same period, while members' deposits appreciated by 12%. This is, however, not to say that all lenders in the movement have been acting ethically.
We've seen a lot of reckless lending in this sector where SACCO just keeps giving money without bothering on the ability of the people borrowing, the ability to pay. And we are saying, moving forward, it will not be the borrowers alone being penalized, because that has been the tendency. It is also going to be the lender.
The cooperative movement intertwines with the agriculture sector, with many farmers' cooperative societies interacting with SACCOs to provide the financial boost required to make progressive investments.
Taifa SACCO, for example, give money to a coffee society and they are 60 million. They are not involved in diamond trade, they are involved in coffee. Then, because the money can't be repaid, you start now saying you want to sell their assets. Which asset you want to sell? A coffee factory. These farmers, who are members of this society, have no idea where that money has gone. They don't even know. You go deeper, you find that it is just the management there in the society that knows where the money went. You go down there, you don't find the money. You ask members, they don't know.
The Cabinet Secretary is pledging to address the challenges of governance facing the cooperative movement.
Remember, the lender is also not their money. This money also belongs to members. So some of these are conduits. Conduits packaged in a nice way that we must deal with moving forward.
The SACCO Societies Regulatory Authority, SASRA, currently oversees about 170 deposit-taking SACCOs in the country and is seeking to rope in another 3,600 non-deposit-taking SACCOs. Alex Mwangi, NTV.
It seems some of these conversations keep going in circles.